Very sorry, guys, to keep you guys waiting. It's just moving to another room, so you guys can hopefully see me better with the screen as well. Okay, let me just check. All right. Okay, good. So screen are on, loud and clear. You guys can hear me okay. So good. Let us start. Let us put a move on while we wait for the ones to come in. But I would like to welcome you guys first. Thank you for coming. Thank you for your patience. Thank you for attending today's live webinar. Today is the 6th of June, 2016. And today we've got a couple of things to discuss. We do have quite a number of questions as well with regards to pairs, to trade, because we did actually have a bit of a disappointing data, okay? Because as you guys know, I have shared a lot of trade ideas on Telegram, on WhatsApp groups as well, and I have put a mention about how the gossip of the market, talking about a US dollar crashing, and also most traders or investors are waiting for more moves on the upside for gold as well. So we will be talking a lot about gold, a lot about a couple of pairs as well. But let us just talk a little bit about what has happened as of Friday. As of Friday, NFP or non-farm payroll figures were very bad. Okay, they were actually very bad, meaning it was the lowest data for employment, which does not actually give a lot of confidence to investors and the market to think that the US is doing well. So for a couple of weeks back, we have been talking a lot about how data may have been manipulated, a lot of positiveness coming through from the US and things like that. But now we are closer to believe that all these numbers may have not reflected the actual growth in the States. So that also means that indeed the States is actually experiencing some slow growth in economy. There may be a lot of things that are happening that we don't know about, but that is reflected by the NFP figures, and the NFP figures were too low. 38,000 jobs. Okay, and I want to also tell you and share with you guys that the numbers, predictive numbers or forecast numbers for employment before the NFP, they were all coming from big experts and people from all over the world, including media coverage like Bloomberg and CNBC and CNN. They have all come up with very big figures. They were actually forecasting jobs to actually go up, or within a very safe number of 150 to 160,000 job created, and that was what they were actually forecasting. But then on Friday last week, we found out that there were only 38,000 jobs. So it's a huge difference between what the experts are saying. All the big economists, they all have been interviewed, and they were giving all this very too big a number on the employment figures, and then the real numbers came up, and that actually went really disappointing. Okay, so this is the thing. Now I would like to share with you first, before anything else, I would like to give you some heads up on gold first. The reason for that is we have had quite a number of, there were quite a number of things that were talk about gold. A lot of people were asking about whether or not it is time for gold to show itself, to start going up and things like that. But the problem is it is a little bit too early on the buy because it is actually still going through a bit of a sell-off at the moment, but this could potentially be, how do you call that? It could potentially be temporary. Okay, we do actually expect gold to come down to the 1160 area first before it makes a huge, potentially significant move upwards. Okay, that's for gold. Okay, guys, because a lot of traders, quite a number of traders have been asking me about this move that we have seen. Now I have shared that on Facebook. So on Facebook, whether it's Facebook Malaysia or Facebook South Africa and the other Facebooks that we have, you would see that the Orbex group Orbex group on Facebook has got some trade ideas there. Okay, so let me just go onto Facebook there, because I've actually got it all saved up just now, but because I've got a bit of a trouble with my screen. But let's not perhaps I don't want to waste more time. Let's just go on to the gold side of it on a 1 hour chart. What I've actually seen is a potential Z-like pattern that if you go onto the Facebook, there's a clear picture there, a screenshot that I've actually showed. Okay, we have got quite a number of movement. I've showed you guys on the daily chart, I think. That was a daily chart, and on the daily chart we have got more expectation to the downside before it goes upwards. Okay, so here for example we have got this huge move for gold. Okay, it looks like there's a Z-like pattern in play, but we are expecting a bit of a move on the downside. Okay, give me a second. Right. Yes. Checking on 1 2 3, testing 1 2 3. I'm just actually going to check whether you guys can hear me okay. Let me just do it here. Okay. Okay. Give me a second, guys. Here, we're just sorting out some things. Okay, guys. So sorry about that. We're just sorting out some technical issues again. So hopefully it'll be sorted out. Okay, because there are still some people struggling to log in, maybe with the technical glitch that's going on. Okay, so with gold on the daily chart, okay, we're expecting prices to come down to the 50% area here. Okay, here. All right. That's roughly at, I think we have mentioned that before, 1175, but I'm looking at a possibility of prices when it comes down for it to actually make that reversal earlier at 1160 instead. So we're expecting prices to come downwards. Now prices where they are, they're actually at 1244. Okay, because as of Friday or in the weekend when I sort of visited the market again on my chart, I've noticed there were some very significant levels for gold. Okay, what that means is we're looking at the 1160. If it does come down, the 1160 has proven itself to be quite a significant support level, meaning that that was in 2010, if I'm not mistaken, that the gold prices have started to peak up. So that 2010 figure at 1160 was where gold have actually appreciated or gone up in value for the whole straight 1 year plus. For 1 year and 2 months or so until 2011 something, prices actually went up from 2010 to 2011. Okay, about a year, 1 year and 2 months or so, it has actually gone up to many points, thousands of points up. So for that whole 1 year, so that level of 1160 has proven to be a very significant support level. Okay, now here what's going on here is, let's say we're looking at gold at the moment. Okay, the pattern that I have actually spotted is that Z-like pattern here. Okay, Z-like pattern that we are looking at a possibility of it coming to the 1160 area. Okay, somewhere here. Right now, but what's going on now is that this is basically a C, all right, and then you have got the DA area here. All right, this is a Z-like pattern. That this is called a bullish Z-like pattern on the daily chart. So we're looking at a possibility of prices making that move up here. Now this area here at 1160, roughly 11, 60. Okay, so this is your 1160 area. So 1160 area, we're looking at a jump up, but of course it may actually come down a little bit more. But at this moment of time, the current movement that we are looking at is a bit of like an ABCD thing. Okay, so that is why the prices is going up there. So I will just clarify that again so that you get a better idea. But as of last week on Monday, I think we did actually clarify that it's making an ABCD move here at the moment. So hopefully that price there, let's just do it this way. Erase all drawing. Let's go on to the normal. Okay, so that price now here, if I pull that one down here, this will be my AB. Okay, that's my C. Not the ABCD of the Z pattern, the ABCD in within the C to D. There will be an ABCD. Usually it's an ABCD type pattern in there. Okay, so here, as you can see, it sort of stopped close to either in between 38.2 to the 50, close to the 50%. Okay, but if we just take that whole thing down here, let's say we correct it right there. Now here itself is where we still expect prices to fall. So it's at 1146. Okay, not exactly 1160 yet, but 1160 is a significant support area, so you should not ignore the 1160 area for a support. So even if prices were to go under 1160, it may not be too far away from the 1160 area to find support to actually go up. Okay, so this is a very important thing. So as of now, the game plan for the daily chart, for gold, whether it is a daily chart, the medium term or the short term ones, is for you to actually look at potential opportunities for selling the gold. Okay, now this is also another gameplay with the US dollar, because at the moment US dollar has been driven down quite a lot. So we have just experienced the NFP on Friday. Now Yellen is Janet Yellen, the Federal Reserve's chairperson, is due to speak, so we are expecting her to come up with some other sort of solution to appreciate the dollar furthermore. So there may be that may actually justify the falling prices of gold. Okay, before gold makes that big move upwards. I'm not saying that it will happen for sure, but the probability of that happening at the 1160 area is reasonably high. Okay, reasonably high. So I would like you to also look always to your left when you're drawing any support resistance. You need to understand that here, for example, this play downwards here, okay, right, this play downwards here, this is a downtrend. Okay, now this downtrend is quite a strongish downtrend. Why? Because even though it's quite short move, as you can see with your eyes visually, but this bears or the sellers have taken over quite significant buying zones. These are buying zones here. You've got buying zones here, and if you actually look into it much more earlier, they have actually taken, I mean earlier meaning previous chart, you drag this chart to your left and you'll be able to see loads of areas, maybe buying zones that downtrend has taken from it. Okay, that means the sellers have taken over from the buyers. Is really important. Now when you look at a downtrend, let me emphasize, you want to look to the left. Okay, you want to make sure whether or not there were significant buying area that this downtrend has taken over from. Okay, that is where it's really important. Now the other thing as well is, okay, I think I've got some questions coming through. Yes, Vincent, you are absolutely right. There has been a bit of a, we're just sorting that one out at the moment. A bit of a screen delay, you're absolutely right. I'm actually struggling a little bit with the speed of the internet as well, if I'm not mistaken. So we're trying. Hopefully that that will get solved when you watch the recording. Okay. Sorry about that. It's okay, Tendai. Welcome. We have not started long, Tendai, so don't worry, because we have had a bit of a technical issue. All right. Okay. I'll start to speak slower, probably, Vincent. Maybe that may help. Okay. All right. Okay, so that is for gold. On the daily chart, you want to actually look into how do you call that, lower time frames to actually plan your trades. But overall, we're expecting a downward move. So that downward move is bearishness or bearish sentiments. Okay, so when you go on to a shorter time frame, you want to look for selling opportunities on shorter time frame. The reason is you look for big movements, potential big movements and big patterns on the daily or on the weekly or longer time frames, okay, in order for you to understand the overall trend. And then you want to match that with similar trend patterns that are giving you the same direction on lower time frames. And only when you look at that similar pattern or pattern that would give you a downward movement, then you trade that pattern on a lower time frame in order for you to not wait too long for movements to happen. Okay, because the daily, the weekly and longer term time frames are filled in with more data that will actually strengthen your analysis a little bit better, as opposed to looking at analyzing the market with short time frame and then trading it at the low time frame as well. It's quite risky if you do it that way, because only on longer time frame that you are able to look at things from a more solid perspective in terms of market direction, in terms of patterns to solidify or to confirm the patterns that you are looking at. It's best to look at the long term first, then you go down to the lower time frame. Okay, let's see. I'm just going to erase that drawing there. Even for me, it's a little slow at this end, so my drawing is also delayed by a couple of seconds. Hopefully we can have that solved, you know, for the next session if we do it. All right. Okay. Now, a lot of the, quite a number of traders have also asked on the current progression of the pound. Okay, this is the pound on the 5 minutes chart. Okay, let me just go to drawings that you probably have seen me share on Facebook or Telegram. Okay, now this one here on the GBP US dollar, for example, even though now the investors or traders are not really reacting on whether or not there is a Brexit or no Brexit, they're actually reacting on just the feeling or sentiments of uncertainty that is going on with the Brexit situation. Okay, so there are too much uncertainty that is going on with the pound versus the dollar at the moment. and this uncertainty is actually causing lots of investors to pull out. So there's quite a number, as mentioned before in previous webinars, we have had quite a number of news coverage on the number of deals that has been cut off in the UK. Okay, and at this moment of time, as of this morning, if I'm not mistaken, or late last night, there were live stream news that were talking about how the banks in the UK are preparing themselves for a situation that they cannot control. So they're parking in enough cash. They're actually doing their risk management and business continuity management type, what do you call that, activities in order for them to save the situation, or not really save the situation, for them to actually manage their clientele, their business better and things like that. So just the uncertainty itself and too many things are sort of very, not only looking disorganized, but giving the impression that things are going to get worse and things like that. So fear is actually a lot of uncertainty and a lot of fear are all mixed up at the moment, and that is dragging the price downwards at the moment. So with that, you got slowdown of economy as well. Okay, you got slowdown of economy. But the thing is that I want you guys to be very, very careful is, of course, we want to look at patterns, but most importantly, we want to also be aware of the economic model. Okay, the economic model is this, like what I've mentioned before. If you need to ask yourself, okay, in whatever that you're looking at, whichever country or whatever pairs that you're looking at, you need to reflect that to the economy, whether the economy of the country is slowing down or it is actually going through inflation and they are trying to slow down the economy. What are they trying to do? They're trying to pace up the economy, trying to help the economy build up. At this moment of time with pound, pound is said to have a sort of very low, and it's getting lower, the inflation rate, so low growth. Okay, so usually low growth, they want to pump in money in. If they pump in money, okay, they want to put in more money in, then they will reduce the rates, the interest rates. If they reduce the rates, then that will actually confirm to more fall of the pound. Okay, so you need to understand that little mechanics itself should be memorized, and just for you to make out your own logic. You cannot follow the logic of the market. You cannot follow what the media is telling you about great news. Like, look, for example, in the United States, they have been telling us for the past many months that the economy in the US has been all good and all great and everything else. But then on the other side, we have got the reality of the data releases telling us a lot about closing down of big corporations, drilling companies, and then we have got a lot of cut-off job. A lot of people has got no jobs and things like that. So that out of the mainstream, there are sites and there are places that are talking and questioning about all this, while the government and Yellen and everybody else on TV are actually giving you very positive news. Hence the reason we are not supposed to actually believe what we really hear. It's best for us to sort of understand the mechanics of economics as well. Okay, inflation. Okay, they have to control the inflation rate. Inflation is the engine. So here in the UK, we are looking into slow down economy. So if it's all about money supply, okay, money supply. If the country's economy is too fast, moving too fast with inflation, the economy is inflating, then they want to reduce the money supply. Okay, when they are reducing the money supply, then they have got to increase the rates. Okay, increase the rates so people, it's not easy for borrowings, it's not easy for lending and all that to take place, so the economy activity starts slowing down. Okay, so increase the rate. But here with the Brexit and everything else that's going on in Britain, we're looking at a slowdown of economy. So somehow there has to be a bit of a pumping in of money to boost up the growth. If they do pump in the money, they have to reduce rates anyway. If they do reduce rates, you have to expect more fall of the pound. Okay, so this is what's going on at the moment with GBP US dollar. Okay, now here with GBP US dollar, I think I've shared with you, like I've mentioned earlier on, we have had a pattern before this that we have that I have drawn. Remember that we have actually talked about a cup-like pattern here and then a handle here, right? Now this handle may have gone too far down, so maybe even though this cup pattern may have failed, but it has not actually failed other patterns that are signaling a downward trend. Okay, for the pound versus the dollar. We are looking at pound versus the dollar on the 4-hour chart. Okay, so let's let me just clear off all these drawing first to give you a bit of an idea what's going on, so you get a bit of a whole picture. Okay, now here there is a potential M-like pattern here. Okay, this is what's going on. You've got an M-like pattern that has started like this. Okay, and then we have got it moved down here. Okay, and then we're looking at a mirror here. So that's your ABCD sort of pattern here. Okay, so ABCD type pattern here. All right. Okay, now this is an M-like pattern here that may give us a bit of a hint that there is a potential for it to reach the 14303 area. Okay, but more than that, we've also got a sort of how do you call that, a flag and pole pattern here for the GBP as well. So if that is a, let's say that is the pole of the pattern. Okay, I'll just draw that. Okay, this upward move here, this upward move like this, for example. Okay, because you've got higher, it went from here to here, so you've got a higher high, higher lows and things. So that may be like a flag-like pattern. So what I'm saying is that it may be playing in within this range, but because of this pole, it is again signaling a downward move. Okay, this is called the pole, flag and pole pattern. Okay, the flag is this part here, and if it does break out and come back down, then you're looking at the potential pips would be similar from the pole. This pole area here, this whole long area that makes out the pole of this flag and pole pattern, whatever what do you call that, number of pips that you see may be the same as coming down from this angle here all the way down. So just to make that simple, for the GBP USD, if we're looking at more selling pressure, okay, then you are looking at number of pips. For example, you want to pull from there all the way, let's say, to the low here. Okay, so that's about 386 pips, let's say. Okay, so then what you do is you can then look at from the very top here, for example. Okay, I think my system's a little slow as well. So from here, for example, you want to pull down to 386 or so. Okay, so around about there. So we could say 1.4180 area still has got a lot of room to see a downward move. So that kind of pattern, the pole and flag pattern, sort of mirrors the M-like pattern that is going on here as well. Okay, so if it does actually make that move down, so you can see it's a two-in-one sort of pattern, but the direction that it is forecasting, that they are forecasting, is the same. Okay, the M-like pattern, this is your C, and then it's predicting D downwards, and then the flag pole pattern as well. But again, you can always look at this as an ABCD type pattern as well. You can always drag this one all the way down here, for example, and look at where it's about 70.7 here. So if you take that one there, AB equals CD, again, they're actually very similar to where the other patterns are predicting it to be. So in other words, you're looking at more potential downward move. Okay, now we're at 442 something, and then it's actually predicting as low as 42 something. So you got 200 plus over pips, minimum 180 or 150 onwards, right up to about 200 plus. So these are opportunities that you can look at the GBP USD, because the question now is not, the traders are not trading accordingly to whether there will be a Brexit or no Brexit. That is definitely the theme, the whole big topic of it. But investors, at the end of the day, they will be reacting to whether there are uncertainties, whether there are fears, or whether there are greed, or what sentiments are they at play. At the moment, with all the Brexit that's going on, there's a lot of mixed sentiments between greed and fear. So that is what's pulling the prices and the depreciating the pound at the moment. Okay, all right, guys. So let's look at other pairs. We have got some requests on the ZAR as well. I'll visit that one in a bit. Let's look at AUD USD. Now AUD USD, it's quite an interesting one. You may be able to find fundamental factors, okay, that are actually sort of justifying the move that's going on at the moment. Okay, we do have now. Remember that the AUD, NZD, as well as the CAD, they are actually in the basket of COMDOL, so commodity currencies. Okay, they usually move quite similar to precious metals like gold, silver as well. Okay, so these are all classified as safe havens or safe haven type instruments. Okay, so at the moment we are looking at more and more uncertainty and fear revolving the currencies, correct? So the currencies are looking like they are not gaining a lot of confidence from investors. So investors are shying away from these currencies, and they are going into safe havens and putting their money more into gold, silver, commodities, and commodity currencies too. So hence the reason we're looking at appreciation of commodity type currencies like the AUD, the NZD, and all that. Okay, now here coincidentally we have a Z-like pattern for the AUD USD on a daily chart. Okay, so here we have got the A here, B here for example, and then C and then D. Okay, but let's not take that angle there. Let's take that angle right up here. Okay, so here is where we're looking at sort of an upward move, but then it went down further and make that very big long move up. Now that big long move up by the big bullish candle that you can see has pierced through a significant resistance area. So these two red lines between 0.7277 and 0.7224 has proven to be a significant selling zone. Okay, but now the buyers or the buyers of that long candle that has pierced through, meaning that the buyers have sort of taken over the seller's area. This is the selling zone, but then now we have got a long candle piercing through. So that piercing through gives us a bit of a hint that, and that happens on a daily chart. So this gives us a hint that AUD is sort of gearing up now, and that is also quite coincidental that we are hearing about gold as well and things like that. But again, it may be too soon to buy. There may be more chances to buy Australian dollar versus the dollar, but the reason is we have got the three lines EMAs here proving to be the obstacle. Okay, so we need the prices to appreciate further, meaning more candles pushing the price up and go above all these three lines. Only then they are more confident to look at more price appreciation to the upside. Okay, so this is on the daily chart anyway for the Australian dollar versus the dollar, and we're looking at if you go on to lower time frames, then you're able to look at it at a shorter time period. Okay, so let's look at the other pairs at the moment. We have got a couple of questions on oil, on what's going on with oil, and a couple of confusion as well with oil. Now, oil has not got a very positive feedback from the last meeting. Okay, from the last OPEC meeting as well. So we're looking at more depreciation, potential depreciation, only because it is sort of stuck at a significant resistance area. Okay, it has not gone past that area. And if we look at it just visually on the 1 hour, on the hourly chart itself, we have got resistance area more than support area just by looking at it. As you can see, let's start here, lower area here. You could see it's all made up of resistance peaks. Okay, then you've got more resistance here, and this is just this level here. You go on the higher level here, for example, at this level, you could see again you got more resistance and resistance right up there, but then all throughout this area you've got loads of resistance again. Okay, so if I actually click on just based on this one here, okay, the body of that candle, okay, let's say we're not looking at that at the moment, okay, at this current candle, let's choose something here. Okay, let's look at, let's say, based on this one here. Okay, just based on that one here, just based on that candle there, and then I'll take the wick off that candle itself, and let's just do it this way. Okay, as you can see, you have got loads of resistance in that zone for oil. Okay, and as you can see now, live market itself is giving you a hint that 49.62 is the price at the moment where oil is trading, but it is proving to be quite challenging to pierce through that zone, and that zone has been made up by loads of resistance zone, as I've mentioned earlier on. Okay, we have got longish candles, whether it's bullish or bearish candles, piercing through. Okay, so here, if at all you want to look at, or you want to question of whether or not oil could actually go up more, what you would need to do then is you want to look at whether or not the candles, the bullish candle at the moment, will go through or pierce through a significant resistance or selling zone first of all. Okay, so we had loads of selling has taken place here, a lot of selling has taken place up here, but within this area there were some selling zones here too. Okay, and more selling zones here. Okay, so I would like to look at huge or bigger selling zones in order for us to get an idea of whether or not we could come up with better selling zones and plot that support resistance area in order to question the price of oil, whether or not it's able to penetrate through the resistance area. Now look at this part here. Yeah, this is the part that I have actually drawn as of last week, if I'm not mistaken. Look at this part here. This is a significant resistance zone. Okay, why? Prices actually fell at this area here. Okay, so let me just go back. Okay, let me just go back there. Give me a second, guys. I know it takes a little bit of time to actually scroll and go back there, but it's definitely worth it to you know, do it slowly. Okay, not to actually rush and do your support resistance zone, because that's it's a break or make deal actually if you draw your support resistance correctly or not. Okay, so here we have got a significant drop in price here. Okay, all the way down. Yeah, so we have got significant drop in price here, and let me mark with that as well. Let me see. Okay, if I mark it based on there, I want to mark based on the wick as well. Okay, so this is sort of a strong type of zone between all these three lines, okay, between these lines here, and as you can see, we've got price drop happening from there, we've got price drop there, we've got all that resistance here as well. Okay, so if I go back, let's say, to where price is now, you could see like a V. Okay, this is like a V here happening. Now a lot of some people are saying that this could actually be a double top and things like that, but double top may not actually meet up there are a couple of criteria that may have not been met here, but I'll just want to look at the pattern side of things and also the support resistance most importantly. As you can see, if we are based on that middle candle here, then I'll move the zone following that wick. Okay, as you can see, prices for oil is struggling to actually penetrate or pierce through the 50 area or the 49 point. No, it's considered like the 50 area, 49.7. You know, have that closest to by decimal, that will give you the $50 area. So as you can see, prices are trying. I mean, oil is trying to pierce through there. As you can see, you've got a sort of a bit of a bullish factor there trying to push prices through. But to summarize, prices would need to actually pierce through with a long bullish candle in order to signal that yes, the bulls have taken over. The bulls have taken over this selling zone. Why is this a selling zone? A very significant selling zone, because if you look at in the past, this was exactly where in this zone that prices have actually fallen. So prices have actually fallen from this angle here, and that was actually, you know, that was actually where oil have actually just fell through. So it's a huge move down. So this is basically what's going on, and you would need to actually look at a mirror of what have actually happened in the past, and that was when it happened probably in last year in October, as you can see, and that was where the price have actually just fallen and depreciated all the way down to the 20 plus dollar per barrel. Okay, so it started off here at close to the $50 per barrel, and it depreciated more than 20 plus dollars all the way down. So that's basically a huge significant resistant area there. Okay, so this is very important for you to understand, that you would need prices at this moment for oil to pierce through that, go above 50 plus, then you can say that the bulls have actually taken over from the sellers or from the bears. But again, you would need to look at the behavior of candles and the behavior of that candle there. Was it a long, powerful bull's candle that have actually pierced through that resistance zone? If the answer is yes to that, then you could be more confident in a price increase for oil. Okay, but at the moment, from a fundamentals perspective, we're looking at still nothing has been agreed upon. What were they agreeing on? They were supposed to agree on cutting production. Okay, but no agreement was made. So what does that mean? That means there will be more supply of barrels of oil being produced on a daily basis. And what does that mean? That means it's only going to drive prices down because it's oversupply. It's only going to add up onto the glut of oil. Okay, that's not a good news. That's not good news at all, because it's going to cause a lot of other issues. Okay, so this is basically it. But unless they have a game play, they might have a game play, or they might have a plan to have prices low as of now in order to attract investors in, so they can present to them that oil will have this much of appreciation value. Okay, but again, in the States and in the seas, we have got a lot of pull out of oil rigs, oil explorations and all that. That has been on a decline. So that decline is not actually giving a good indication of a price increase in oil or a production decrease of oil barrels. Okay, all right guys, so that is for oil. Now let's move on to other currencies. Now the old famous Euro USD has got a sort of pole type pattern. Now this is sometimes I would when I look at patterns like this, okay, when I see movements like this based on a long candle, that could easily be categorized as a signal to a flag and pole type pattern, which only would signal more move to the upside, okay, only if there is a move downwards, like a channel down, and then it makes it more possible for prices to actually go right up, all the way up once it breaks it out, okay. But at this stage it's probably a little bit too early, but I'll just give you a bit of an indication to look out for. It's a channel down, okay. It's a channel down that I'm actually looking at for more hints for it to go up, okay. Now this one here, right, let me just adjust it a little bit, okay. So that is sort of like a down type pattern. So the longer that channel comes downwards, the more powerful the breakout will be, and that breakout usually will mirror that movement in pips of the pole side of it, okay. This is just a possibility, but we don't actually know just yet, because anything could happen at this moment of time. We could have prices break out and come back again here and then go up, but it's probably best for us to wait till the breakout occurs. Now this is another thing. Look at the price. The price is at 1.1358. 58 is about 8 pips away from the 50 site number, so I would like prices to actually go further up past the 60, maybe even past the 80, and then I get more confident that it would actually go up much more. Why? Because based on the pattern, we have got more indication that the price move upwards could potentially be really big for the, I mean, based on the flag and pole pattern, okay. So that's why I'm not in a rush to actually grab prices as it breaks out, because I've got an indication of how much pips to make based on a flag and pole pattern. So it's more important for me to actually look at prices, appreciate further past certain psychological numbers or prices to ascertain or give me more confidence of an upward move. Okay, now that is for the euro. Now let's look into the euro based USD again, but on a daily chart. Okay, now these are lines that I have actually drawn, the horizontal red lines, as you can see, from 1.1385 here right up to 1.1435 area. As you can see, prices now is at 1.1357 or so. Okay, now again, this area here has proven to be a significant resistant area, meaning that if prices were to visit there, most likely, you know, it might find resistance and obstacles to go up further. But if at all, the euro on the daily chart especially has got more room using a longish bullish type candle to penetrate through that zone, then you can say that there are more room to the upside. But at this stage, we just have to see there are some room from 1356 to 1385, just a little bit there, and then maybe further up, okay, for a play with the buying side of things. But again, we want to look at shorting it once it goes under that zone. Once it makes a return or a correction in this area, it goes up and makes a correction in that zone, and then, you know, comes down and comes under that 1385 area, perhaps at 1370 onwards, you can actually probably plan for an ideal sell or short, okay, the euro. All right, so if we go on to the 4-hour chart, then you're looking at almost the same sort of thing. We're looking at a pole-like thing here, but again, if on the 4-hour chart or the daily, we're looking at the 4-hour, I think, at the moment. I'm sorry, guys, it's a bit of a slow response at the moment overall with my chart and the computer. Got a bit of a glitch going on. So now we're on the 4-hour chart, okay, for the Euro USD. So if we're looking at, for example, I've got a pole-like pattern here, okay, pole-like movement here. All right, then as the days go by and all that, I see a decline in price, and that decline in price going from lower highs or lower lows and all that, making you a channel going down. Then the longer that channel down is, the stronger the pollen pattern formation would be. And once you have more downwards move, is actually a good sign that if it does break out from that channel, then it could go as high or as big as that pole, the number of pips for that pole. Okay. All right, so at this stage it's a little bit too early to enter buy sell for the Euro USD. Only looking at the price itself, it's too close to the psych number. Okay, so we want to look at prices go above 60 and further to signal upward like trend. But if it were to be an upward side move, it has to penetrate this zone, which is it's looking quite challenging at the moment. Okay, even though we have got a large movement here, because prices is no way close to that area at the moment, and we need to watch and see. But if it does go up here and make a return downwards, then it's probably best to look into a sell or shorting position for the Euro USD. Okay, now any other charts that you guys would like to look at, or I'll just visit through a couple of charts first. Let's just look at what we have. GBP CAD, I would like to go through charts that have definitely drawn a sort of pattern or have seen a good analysis for it. Okay, here for example, for the AUD versus the CAD, wow, now we've got two COMDOLs. Okay, which is the stronger one? COMDOLs are commodity currencies. Both AUD and CAD are commodity currencies, but here AUD seem to be governed or controlled by sellers, as you can see. But in terms of pattern, we may have a sort of an ABCD type pattern here, as you can see, ABCD. Okay, now best for us to look into where did the C land at. Now it looks like quite nice 78.6 type landing that it did around here, but close to 88.6 as well. Okay, so AB equals CD may give you a bit of signal or indication of where price could end up at, and that gives you an idea here. Okay, 9477 area. Okay, so perhaps 9480 or 90 you want to sort of escape quickly before it attacks you based on the psychological level. Okay, now I think I've got some question going on. Give me a second, guys. I know I'm responding a little slower, mainly because of what's going on with my computer. Right, so yes, I think I've got some question. No problem, Tendai, it's fine. You can also watch the recording. We started quite late as well, Tendai, because I have had some technical issues, so that's why. All right, so USD CAD, says Veronica. Okay, no problems. Shall we then visit USD CAD? USD CAD, I think quite a number of traders were looking at it as well, have asked me last week on it. So let's go there. Give me a second. Let's look at what's going on with USD CAD. I thought I had it here. USD CHF. Did I actually have it around here? I thought I've actually saved it here. Give me a second, guys. Oops. Right. AUD CAD, USD CAD, I don't see it there, so let's do that right away. I think, if I'm not mistaken, the USD CAD, quite a number of selling opportunities have actually been posted as well. Please do check the Facebook. I'm intending not to visit Facebook while I'm on here, just because it might take more time and the speed's not that great at the moment, so that's why. Okay, so yes, we have got quite a number of the movements at the moment, the signaling on the downside, but then we've got patterns as well. Now USD CAD on the 1 hour chart, as you can see here, as you can see, we have got more move to the downside. Looking at price itself, 1.2869, so it would need to go towards the 1,250 area and then below 1,240 to signal more movement. But here itself, we could see that there is a potential flag pole type pattern here. Okay, all right, that breakout there. Okay, so as you can see, we have got the pole, the flag, and then more pole downwards. Okay, so that is what's expected. Okay, so you can treat this as an ABCD type pattern, pull it from this angle or even higher, no problem, but let's take the minimal. Okay, and the lowest part, as you can see, it's quite close to the 38.2. okay, 38.2 retracement. So if I take that, okay, and I pull that one downwards, so still a bit more room to the downside for USD CAD, and that could be close to the 12800. So 12800, it's a very risky area to take your profit because it's right on the dot of the psychological level. So you would like 10 pips above that at 2810. Okay, 2810 for example. Let's just look at, you are now at 2865 or 66, so 2810, there will be about 50 plus pips to take. Okay, but again, this is not a good price as of now to actually enter sell because it's not under the 50. Okay, it's at 65, it may go down 50, a 50 area might just bounce up again, make a correction, so it's risky unless you want to take that little pips, you know, to sacrifice taking a lower number of pips in terms of profit by entering only at 12840 and then looking at it, you know, to take profit at 10, so that's about 30 plus pips or so, okay, or less. So that's what's going on at the moment for USD CAD. But on a big scale, there's something quite interesting here. USD CAD might mirror one of the other pairs as well. We have got a huge ABCD here itself, okay. AB here could equal to CD here, right? But this is where the price is at the moment, so that is a little risky, okay, if we do AB equals CD there. But the other thing that you can actually do is grab this all the way up. That could make out the XA XA move of the M-like pattern, okay. But perhaps you want to use a smaller M here instead of all the way down, because that's a nice 61.8 landing there. Okay, it's a good sign. So if this were to be an M-like pattern and a successful M pattern, meaning that once it has reached around the D area, it's due to do a rise up anytime soon. Okay, so how do we sort of confirm that? We actually mark this 78.6 area, very powerful area. Okay, we mark it like this. Okay, so what that means is this is where potentially the US dollar could actually bounce back up. Okay, so I will take X and I will also go to C as well, just to see where. Now the question is, where could it actually bounce up from, meaning a correction to go up, because once the M pattern has completed at this area here, it will look into possibilities of prices going up. So I've marked the 78.6. I will also mark the 61.8 area. Okay, just to give us a bit of a range type thing. Okay, now delete that. What if we look at the C part? Where has the C landed? That's close to 78.6. Okay, so what I'll do is I'll drag the B to C. I'm still looking for where the D could actually land, or trying to look for the zone. Okay, let's say it's there. So 1.272 is right down here. Okay, so we have some possibilities, sort of like a range thing going on, just to give you an idea where prices could do it. Okay, right, so we do it like that, take it like that, take it away. All right, there we go. So we have got a range now from 12914 to 12846 area. Now anywhere within this range could see to a possibility of the dollar rising up again. Okay, so we need to watch out for this area, because now we want to look at the 2850 area as a potential a bounce up area. Why? Because that's the psychological area, psychological level. Okay, so looking at this pattern itself, it gives you, yes, it gives you a bit of a potential to the downside from C to D, but if we draw a pattern like this, we take it from here, that becomes the X to A. Okay, then as usual, you have your A, B, C, D here. Okay, this is your A to B, right? And this is your B to C, okay? And that's the last leg there, as you can see from here, C to D. So we're looking at potentially prices to bounce off anytime soon, because we have got this area here. So if prices were to come lower than this zone, then we have got more downward move. Okay, right, so this is where we need to be very careful. So let's look at the significant support area close to the price now. Okay, now go a little bit there, and as you can see, we have got price increase all the way up here, starting from this zone here. So we can make another, we can put lines based on this one here, the body of that candle, and also based on that wick here. Okay, so we are actually very close to a potential reversal type zone at the moment for USD CAD. Okay, as you can see, loads of support, powerful support are all in within this line at the moment. Okay, so we want to watch out. We want to either exit earlier your sell trade, okay, exit now, or wait for your buy trade after prices have gone above the 2860 area. Okay, so you got to wait. So wait for prices to bounce upwards, go above 2860, then you've got a buy sort of move, and you can then your buy could easily be targeted, let's say at the 50%. Once it has ended here at D, you pull from your C to D and you look into the 50 area as your take profit for your buy. So your buy will start from 1 to 60 onwards to this 50 area here. Okay, so you've got about 100 plus pips there to look into for the buy side of it. For the sell side of it, it's probably too risky to actually buy and hope for prices to fall too much down for this moment of time, because it's due for a correction based on the M-like pattern. Alright guys, so that's basically it on the USD CAD. I mean, if you guys have got any more pairs, perhaps you guys want to share with me on the pairs that you're looking at, what you are looking at as challenging at the moment. I mean, we will discuss more troubleshooting type specifically on your trade. If you are already clients with Orbex, and you have a live account, you can always join me on Wednesday, same time, that's 4 p.m. In the afternoon my time. Then we will be able to discuss your trade on the money management angle, as well as the analysis side of things as well. Okay guys, all right, so if you guys have got no more questions, then I will wrap up today's live Monday webinars in order for you guys to join me again either on Wednesday for live account holders or next Monday for all. Okay, All right, any more questions, guys? I'll just give it another couple of minutes or so before I end this webinar. I do apologize for technical glitches and things like that today. Hopefully by Wednesday when I do my session onwards, I'll have that all sorted out and no issues with regards to that. Okay, guys, no questions at all? Any pairs that you would like to have a look at? Euro JPY, very interesting 1 hour chart. As you can see, loads of direction, loads and loads of downward momentum. As you can see, it's got like a stairs coming down. It's only making more and more lower highs and lower lows as well, so it's signaling more and more downward trend, and it's against JPY. So JPY, I mean the yen, they're looking into gearing it up, I would think, and the euro is actually going through, Eurozone especially is going through a bit of a tough time, and deflation is said to be happening at this moment of time. All right, yes, I have got some question. Let's see. The USD ZAR, yes, I hope you guys are also monitoring your Telegram. Tendai, I know you are on Telegram. I have sent on Telegram itself 2 charts on USD ZAR, so please take a look at that. Go upwards. I think I have detailed on what is expected for the USD ZAR. Okay, so do refer to your Telegram messages there. Okay, because as soon as I got some requests on the USD ZAR, I have put that through. So it's quite clear there with the screenshots as well. So please take a look at the Telegram group there, okay, based on your USD ZAR. Okay, a bit on the USD JPY for Veronica. Give me a second. Let's see what's going on. Okay. All right. What's going on with the USD JPY? Right. Now, visually itself, I mean, visually, when we are looking at current price movement, it looks to me like there's a lot of dominance by the bears, by the sellers. Okay, as you can see, you got a lot of dominance here by the sellers. Okay, now you would like to look into the zone that prices could go up. You want to look at significant, like this one is a fairly small type move, small, I mean, on the daily chart, but you want to look at, you want to go through this, and you want to look at huge significant ones like this one here, this big move here. Okay, so this big move started here, okay, at the opening here, right, based on that candle there, and then because it's based on the bullish candle, I will take the bullish candle wick of the bullish candle as well, and then I have a zone. Now this zone here, based on that move here, this is where prices have actually appreciated all the way from here right up to this peak here. So that's quite a significant move upwards at the moment. So this is your support, significant support zone. Okay, so yes, prices looks like it's coming downwards. Okay, but you got to watch out for this support zone. What that means is, if you want to know whether or not the bears have dominated it or not, you would need a longish candle like this to penetrate through that zone. Now that zone is made up of 105.88 to 105.53. So the long candle would need to actually penetrate or pierce through that zone in order for you to actually look into more selling pressure. So once the selling pressure have actually gone through that, then we are looking at more selling opportunities only after prices have actually gone through or pierced through that zone. At this moment, prices still holds. There are still, there may be more bullishness expected for the USD versus the yen on the daily chart. And we want to actually ignore, let's say we ignore the 2 last lines that you can actually see. Now you're actually looking at prices at this moment of time on the daily chart, okay, we're looking at quite a significant increase in price because we're looking at the daily chart, you see. So we're looking at prices at 107.29 at the moment, and we're looking at prices slowly, creeping upwards, okay. But that creeping upward move is based on the daily chart. So if we go on to the 1 hour chart, probably we're able to look at, from a different perspective, we could look at a bigger sort of move, okay. But let's go back now. Oops, I think it is still on there. Let's just unclick the daily chart, go back to 1 hour chart. All right, now as you can see, yes, we have got on the 1 hour chart a little increase, okay. But again, as I've mentioned earlier on, whenever I see a sort of pole-like formation, longish candles down or up, I would like to regard that or sort of reserve my mind to think that there could be a possibility of a pole and flag pattern. Okay, so this could be a pole flag pattern. We don't know that yet. So how do we actually know whether prices would actually go up further more or further down? So this is where we actually go back to the daily chart, and as mentioned, based on the zone that I have showed you earlier on, okay, we have got price increase starting from this angle here. We could actually add another horizontal line based on that candle there where price have actually increased, okay. So when you do that, we could see that we have got a bit of dominance by the bulls. Have the bulls taken over or not? We don't really want to put that as a guess too soon at the moment. Why? Because we're looking at the price 107.32. Now 32, if it goes up further and further, it would be close to the 50 side number. So I would like to be safer to think of a price increase or appreciation of the dollar far better once it has reached the 107.60 area. So once it has gone above 107.50 and then it goes towards 107.60, and then it looks like the momentum is picking up, looks like the candle behavior is actually quite aggressive on the buying side, then we know that there are more strength to the buy side. Okay, so this is the zone, guys. This is a very significant zone here. Only if you see candles or one single candle, bearish type, longish candle, or a lot of candles piercing through, trying to penetrate through this wall here, only then you can say that there are more selling pressure. At this moment, it looks like there are some hints that market for USD JPY or the pair itself would actually be appreciating in value, because we are looking at it bouncing upwards from significant support area. So all these three lines makes a significant support area from 10625 to 10553. Okay, but these two lines here are the most significant ones, okay, because we have seen a lot of price increase there. So just to quickly make that confirmation, we drag prices, I'll just, okay, there you go. As you can see, that's where prices have appreciated. Now prices are above this zone, giving you more indication of an upward sort of momentum, or something is happening with the buyers. The buyers are the one dominating at the moment, not really the sellers at the moment, because the sellers are not really close to that zone or under that zone, because this is where the sellers are concentrated on. Sellers are concentrated on significant selling zones, and this area here are one of the many zones for selling through only after it goes under. These are buying zone because it's a significant buy zone, but if the sellers have actually managed to overcome that, come through or pierce through that zone, then we can say that the sellers have taken over from the buyers. Okay, let's just look at more hints as you can see, you know, it's created some sort of resistance close to that zone that we have drawn there. Okay, if we go back and back, let's just see whether we could find anything significant, any move previously in history. Oh, look at that. Yes, we have. We have got more selling pressure, or selling has started here as well in that zone. So that zone that we've drawn is sort of like a border for you, a border that will tell you, give you ideas and hints. If prices have pierced through, or candles pierced through that, go under, that means it's a selling zone. If it's bounced off from that zone and go upwards, that's your buying zone. Okay, let's see. As you can see, more selling has taken. Now this is what you would like to see if at all you want to confirm whether or not that is a significant selling zone, is when you have got significant no, if you've got big movements by biggish type candle piercing through that zone, and this is what happens. You see, it got more selling pressure. That means that the sellers are really powerful at this stage, and they have broken through or pierced through that wall. Okay, and that will then give you an idea of a downward side of move. Okay, so yes, we have definitely identified a very significant zone. Okay, as you can see, more resistance has taken place here, resistance here. So that zone has made up of very significant support, very significant resistance, and also very significant pierce through by candles. This is also very important. Okay, so there's a lot of action, a lot of activities, a lot of power battle between currencies within the zone that we have drawn here. Okay, as you can see, again, loads of support have actually concentrated on this zone as well. You've got a nice significant move up here, again significant move up here within this zone, and it went up there. Okay, and if we just drag as far as we can, now that is where we could drag that to the furthest. So that itself give us a lot of story, okay, of what's going on. Now live, as you can see on the daily chart, USD JPY, as we have said earlier on, is a significant support resistance zone. So this is what's happening. As you can see, prices is still appreciating on the upside. Okay, so if you are asking, okay, if it does actually go upwards, how far can that actually go up to? So what you need to do is look to your left and look for significant selling zone. And that selling zone in the past could prove to be an area to watch out for, where prices may fall after it has gone up a bit. You will find places to fall back from significant resistance zone. Okay, so here, that's one resistance there, but it's not very big. Okay, so let's see anything close. There you go, we have got a resistance area here. Okay, so let's mark it that way. Let's say here. Okay, this is where prices have actually fallen. So if we go back here, there you go, prices go up, and you want to watch out for that area there, 109.81, which is, you know, very close to the 80 site number. So if at all you're actually buying, looking at potential for a buy, you need to exit, get out before it reaches 109.80 level. Okay, so far here it's clear on the path to go upwards, because you don't have, I'm not looking at any resistance. I have not seen or spotted any significant resistance area within that zone. So this also gives you an idea that if at all you're on a buying spree or on a long for the USD JPY, you may be able to actually grab that 100 plus pips there. But again, we're trading based on the daily chart. So if you want to find out more about buying opportunities within a shorter time frame or shorter period of time, you want to go into shorter time frame to look for shorter opportunities. Okay, shorter time frame for opportunities that would be on a day trade side of things. So here we can see still on the daily chart, this is daily now, let's see, on the 15 minutes chart, we can still say that yes, you've got some opportunities there, but again, based on price, perhaps it's better for you to enter a buy above the 50 area, so 107.60 would be good, and you take it in stages to go upwards to buy. Okay, all right guys, I think that's all I have for you guys now. Would like to wrap it up here and meet you guys again tomorrow. Meet you guys again on Wednesday or next Monday for those who are attending the Monday ones, or if not, on Wednesday. All right, guys. So if you guys have got no questions for now, I would like to just say a big thank you for you guys, and thank you for your patience as well, since we've got some technical glitch today. Send me an email to request for the recording. If not, the easiest thing to do is to actually go onto our website on the blog section, and it's exactly where you have registered, and usually the recordings are made available there itself. Okay. So feel free to do that, to go there. All right. Okay, guys. Again, thank you guys, and we'll see you again either Wednesday or Monday next week. Okay. So thank you. Bye-bye now.